I'm Rick Kaler. Thanks for joining me. With displays of Valentine candy crowding out the aisles at every store you go into, February seems like the perfect time to talk about chocolate. A creative financial planner might seize the chance to steal Forrest Gump's analogy and say, diversification is like a box of chocolates. Except it isn't. True, a box of chocolates might have a lot of variety, cream centers and caramels, nougats, nuts, dark chocolate, milk chocolate, truffles, but it's still all just chocolate. Buying that box of chocolates would be like investing your retirement savings in a variety of U.S. stocks. Even if you had a dozen different companies, they would all be the same basic category of investment. So maybe instead, let's suppose that you gave your true love a Valentine's gift made up of chocolates, Girl Scout cookies, baklava, and apple pie. Well, now you'd be a little bit more diversified. But everything is still dessert. That'd be kind of like compared to investing in different types of stocks. You have the U.S. stocks, but then you'd also have some international, some emerging markets, some Germany, Japan, Chile. But you're still just going to have lots of different kind of dessert. So you're going to be a wiser investor if you had taken your true love out for dinner and had a meat course, salad, veggies, bread, and dessert. Maybe add in some wine and coffee or tea, and you'd have 5 or 6 asset classes. Now you're starting to see real diversification. Now, some examples of asset classes in addition to U.S. international and emerging market stocks, again, our dessert, are U.S. and international bonds, or which might be meat, maybe real estate, which could be the bread, commodities, that could be the veggies, absolute return strategies, maybe that's the wine, and cash, there's our salad. The best investment strategy for long-term growth is asset class diversification. Now my preference is 8 or 9 different classes. For many clients, I recommend a mix of U.S. and international stocks and bonds, real estate investment trusts, commodities index fund, maybe market neutral funds like merger arbitrage or managed futures, junk bonds, and maybe some treasury inflation protected securities like TIPS. Fluctuations in the market will tend to affect these various groups of securities that are within an asset class, like a lot of different stocks. And it'll affect it in the same way. For example, most U.S. stocks would generally move up or down at the same time. So owning shares of several different stocks will not protect you against changes in the market of that asset class. When a portfolio is well diversified, the volatility is reduced even during times when the markets are moving strongly up or down. And when I talk about investing in a variety of asset classes, I don't mean owning stocks, real estate, gold, or other assets directly. For most individual investors, mutual funds are a much better choice. Occasionally somebody asks me, but why would I want to have everything in mutual funds? That's not very diversified, is it? Well, mutual funds are not an asset class. They're not an investment. Going back to our food analogy, a mutual fund isn't a type of food. Instead, it's the plate you put food on. A single plate might hold one food item or might hold servings from several different food groups. More specifically, they are pools of money invested by managers. One fund might invest in real estate investment trusts or REITs. Another might have international stocks chosen for their high returns. Others invest in a diversified mix of asset classes. The mutual fund is just the plate that holds the investments. Annuities and IRAs are also examples of different types of plates that hold investments rather than asset classes themselves. If you use your IRA to purchase an annuity, though, all you're doing is stacking one plate on top of another. Does not give you another investment, doesn't give you another asset class. It just costs you more for the second plate than the cost of maintaining it, like washing it. So having a box of chocolates for dinner might seem more appealing in the short term than eating a balanced meal. Investing in the get-rich-now flavor of the month might seem tempting too. Yet, in the long run, asset classes and diversifying those asset classes is the best way to make sure that you have a healthy investment diet. Happy Valentine's Day, and thanks for joining me.